Whether you realize it or not, there's a single financial market out there that touches your life every single day. Yeah, from the beans in your morning coffee to the phone in your hand. And no, it's not the stock market. It's something way, way bigger. Today, we're diving into the wild world of Forex.
$4 trillion. I mean, that's a number so huge your brain kind of just short circuits, right? That's a 4 with 12 zeros after it.
And that number represents what's traded on the global currency market every single day. To put that in perspective, if you took all the money from all the stock markets in the entire world for one day, it wouldn't even come close. This isn't just a market. It's the giant financial ocean that everything else just floats in.
So here's the crazy part. This massive, decentralized market wasn't part of some grand plan. Nope, it was actually born from the wreckage of a much older system. So to really get how it all works now, we've got to jump in the time machine and go way back.
So, how did we get here? Well, for the longest time, what the world really craved was certainty. I mean, after ages of unpredictable money, nations finally got together to create a system where you knew exactly what your currency was worth compared to anyone else's. This was the age of certainty, and it all started with a very shiny, very familiar precious metal.
It all kicked off with the gold standard back in the 1800s. The idea was super simple. A British pound was worth a set amount of gold, a US dollar was worth another set amount, so the exchange rate between them was totally fixed and predictable. But then, World War I happened, and it shattered everything. Countries had to print tons of money to pay for the war, and that broke the link to gold. It was chaos. So, in 1944, with World War II winding down, the Allies met at a place called Bretton Woods to build something new and stable, this time centered around the world's new economic superpower, the United States.
And the big idea they came up with was the Bretton Woods system. Here's how it worked. Every other major currency was pegged to the US dollar at a fixed rate. And the dollar itself, it was pegged to gold at $35 an ounce. The dollar basically became the new gold. It was the anchor for the entire global economy. And you know what? For a good while, it actually worked.
But anchors, well, they can't hold forever, especially when the economic tides get really strong. That stability, the very thing they were aiming for, actually had the seeds of its own spectacular collapse baked right in. Let's talk about the moment it all fell apart.
So, by the early 70s, the US was spending a ton of money. Vietnam War, social programs, and it was printing way more dollars than it had gold to back them. Other countries, they started getting pretty nervous. They began showing up and asking for their gold back. So on a Sunday night in 1971, President Nixon gets on TV and just cuts the cord. He unilaterally ended the dollar's link to gold. They called it the Nixon shock. They tried a last-ditch effort to patch things up, but by 1973, it was over. The fixed world was gone for good.
And this one event created two totally different financial universes. The old fixed system, that was like train tracks. Super predictable, but rigid. If something went wrong, the whole thing could derail. The new floating system we have today is more like a river. It's flexible, responsive, and always moving based on supply and demand. But as anyone who trades knows, that river can get incredibly volatile. And it's that volatility that created the modern Forex market.
Okay, so if the market is setting the prices, who exactly is the market? It's not some building in New York. It's a whole pyramid of players, from the most powerful institutions on the planet all the way down to folks like you and me. Let's meet the movers and shakers.
Right at the very top of the food chain, you have the central banks. We're talking about the US Federal Reserve, the European Central Bank, the big ones. Their goal isn't to make a profit. Nope. Their job is to be the guardians of their economies, to manage inflation and keep things stable. They're the ultimate authority. Just below them, you've got the engine room, the interbank market. Think of this like a members-only wholesale club. This is where the giant commercial banks, the names you know, trade currencies directly with each other in absolutely massive amounts. They're the ones setting the baseline prices that trickle down to everyone else. Then you've got the heavy hitters, the big money players, hedge funds making massive speculative bets. You've probably heard of guys like George Soros, who famously broke the Bank of England by betting against the British pound. And of course, you have giant corporations that are constantly swapping currencies just to do business around the world.
And finally, way down at the bottom of this huge pyramid, there's the retail trader. That's us. The internet and online brokers completely blew the doors open, letting literally anyone with a computer and an internet connection jump in and play in this global sandbox.
So let's circle back to the top dogs for a second. The central banks. We know they're the guardians, but how do they actually do it? How do they nudge a multi-trillion-dollar-a-day market? Well, it's not magic. It's a thing called monetary policy.
They've basically got three main tools in their toolkit. First, and this is the big one, interest rates. Think about it. If a country raises its interest rates, global investors want to buy that currency to get that high return. More demand means a stronger currency. Simple. Second, they do what's called open market operations, which is just a fancy way of saying they buy and sell government bonds to either pump money into the system or suck it out. And third, they can set reserve requirements, telling banks how much cold hard cash they have to keep in the vault, which changes how much they can loan out.
All right, so we've gone through the history, we've met the players, but why does any of this really matter right now? Because the very foundation of this whole system, the absolute dominance of the US dollar that started way back at Bretton Woods, is changing. We're watching the global tide shift in real time.
Okay, check this out. Let's go back to 1999. The euro is brand new. As you can see, the world's central banks held their emergency savings almost entirely in US dollars. We're talking over 70%. The dollar wasn't just king, it was the emperor of the world.
Now, let's fast forward just one decade to 2009. Whoa, look at that shift. The dollar's slice of the pie dropped all the way to 62%, while the euro's share jumped up to 27%. What was happening? Central banks all over the world were actively moving their money around, getting away from relying only on the dollar.
So what this trend shows us is that, yeah, the dollar is still number one. It's still the king, but its undisputed, untouchable reign, that's being challenged. The world has started moving from a system with one clear financial superpower to a system with, well, at least a couple of serious contenders.
And hey, don't just take it from me. Listen to this. This is a quote from Alan Greenspan, the guy who ran the U.S. Federal Reserve for almost 20 years. And he said this way back in 2007. Even at the absolute heart of the American financial system, they could see a world that wasn't totally centered on the dollar was becoming a real possibility.
Which really leaves us with one big, final question. In a world where economic power just keeps shifting around, what happens next? The story of money is never static. It's always changing. And the moves being made in this $4 trillion a day market are going to be what ultimately shapes the value of the money that's sitting right there in your wallet.